Okay. Audio, video should be back. You guys hear me? Screen's good? Let's get rid of this up here. Beautiful. Okay. Um, so I, I try to just make like a note of it each time, but these are always recorded, and they're usually up on YouTube. So T3's YouTube page by the following day, normally about by noon or early afternoon at the latest, typically. So if for whatever reason you can't make it, or maybe if you have conflict, something coming up, or maybe you show up late and you want to go back, these are up on the website just under options to play tab. So on the T3 like YouTube page under the options to play tab, you can find these. They're all up there at your disposal to go back whenever suits you best. All right, um, and uh, feel free to ask questions whenever, because that's really what these are all about. Like these like the every couple of weeks we get together, and it's really just about like I want it to be like a as helpful an experience as possible, interactive. Like I want if you have questions, like I want to do my best to help answer them, or maybe like walk through like the thinking behind it. So um, please don't hesitate to like fire off questions as we're going along. Sometimes I can kind of get in the groove and I just start talking, and we go through a lot of stuff really quick. So if there's something that you maybe want to go over a little bit more, just please don't hesitate, all right? Because that's really what it's all about. So I like to start off just going over like the overall state of the market is what I call it, and it's mainly because like so much of what we do as traders revolves around. I feel like it revolves around um, kind of like figuring out like different biases, right? So I say biases, but it's basically like you want to be on the right side of the market when it's moving, right? So like if the market's rallying, you want to be long. When the market's selling off, you want to be short, right? So that's why I really like to spend time going over like what I'm seeing, what I'm looking at, because obviously it impacts a lot of like the trade ideas I write up, and like it's kind of like deja vu all over again, because we basically are back above the 8, right? We're back above the 20. I mean, like this has recently just been like a great setup for bullish momentum. So bullish trends, so breakouts, um, trend reversals. So like things that are maybe have pulled back. You're looking for a reversal back into the trend. You're looking for continuation patterns, right? Basically, long story short, with the spiders up above this 8 EMA, which is really like the key momentum moving average, and then specifically the 20-day, that's kind of like the line in the sand. So as long as the spiders remain above the 8 and the 20, you're really just focused on like bullish setups. Like I I really, I'm not just like going after any stock that's up. It's still got to be like a really quality pattern, right, or a quality setup. But really, like at the end of the day, like I feel like more than 50% of the trade focuses should be on the bull side, because that's really where the momentum is. Like that's what's working the best is like bullish setups. So again, it's like breakouts, it's reversals back into the trend, or like trend continuation. I mean, like that's really what's working the best, right? And you know, I sometimes it's hard to separate the headlines from the action, right? I mean, today was one of those days where it could have been so easy to come in today and just dump everything, right? I mean, you had Apple warning about revenues because of the coronavirus, and it seemed like after the run we've had, like it was just like a good time to just get out, right? I mean, like you thought everything would have been crushed because the biggest company in the world just warned, and it seemed like we were setting up for like a really ugly day, and lo and behold, like the Qs actually finished green today. So it's just it today to me. more than any day recently. I know exactly, and like that's why I think like today is such like an important reminder that sometimes as hard as it is, and like trust me, like it like today was one of those days where like I took things a lot slower because like I just felt like there was going to be like a like the bottom was going to like drop out, like I thought it was going to be one of those days where we were down like 2% or so like 5 or 6 points on the SPY, but it just never happened. And like it's like just a really good lesson in why you don't want to react to every specific headline. Like wait, like let the setups develop, let the setups dictate what you want to do, right? That's why for a lot of like the trades, like I always try to lay out like a target, so like a preliminary or initial target, and I lay out like a stop, right? And if like this like the trade hasn't hit the target or if it hasn't hit the stop, then you're really just trying to be patient, right? And like today, it would have been so easy just to like dump things, like just I'm sure like even if you're in like short term options, it wasn't like a pleasant day, but still, like at the end of the day, a lot of things that were down off the open or red off the open had a pretty good day. Like a lot of like things like finished green. So it's just you kind of just need to like stick with the plan, maybe tune out the noise a little bit and just kind of like focus on the patterns sometimes, like it's as difficult as it can be. I feel like when we're in like this headline driven tape, you really just need to focus on like the levels, on your stops, on your targets, and if nothing gets hit, then you're kind of just trying to be patient, you're trying to sit, right? So going forward, like Qs, spiders, Dow, I mean the 8 EMA, super, super, super important. If we lose that, it doesn't mean that we're going to fall apart, but that opens up the possibility that we get a deeper retracement into the 20-day. If we lose the 20-day, which for both the spiders and the Qs are, we're pretty significantly above the 20-day. That's this pink line right here. So if we lose that 20-day, that's when you really got to start being more cautious. That's when you got to start either cleaning up longs, maybe start focusing a little bit more on the bearish trades, because historically and recently, more specifically, once we've lost the 20-day, it's really created a lot of higher volatility ranges, like more like deep pullbacks, more deep drops. Yeah, I don't know about recession, but it's it to me it's like you ride the momentum until it stops, right? So momentum line in the sand ultimately for me is this 20-day. Yeah. So focus on the 20-day. As long as we're above the 8 EMA and the 20-day, I think bull setups are really what you want to focus on. Um, but once we lose that 20-day, then you really got to like start to be more cautious. You got to start maybe taking down risk and focusing maybe more on like two-way trades. But for right now, as bad as like the headlines are coming out of China, it's it's just momentum is still intact. Like the bullish trend is still intact. The best action still in bullish setups. So like that's really what I'm trying to focus on is bullish setups. All right. Yeah. It's not, it like today was like a great example why it's not easy to hold on in headline driven tape, but you just really focus on the levels. Every trade you get into, you got to have a stop. You have your target, and if the stop's not hit and the target's not hit, then just trying to be patient and let the trade develop because you had a reason for getting involved, and as long as the reason's still valid, then you just kind of let the trade do its thing, let it develop, and just try to like tune out some of the noise. All right. Um, so what's kind of interesting is yield. All right. So in a pretty strong tape, you wouldn't necessarily expect like they're kind of almost like protection oriented sectors. So I when I say yield, I mean like bonds, very strong, utilities, very strong, right? REITs, very strong. right? So like this is what I mean. There's like a lot of like really strong under the surface action taking place in kind of like defensive names, which is really odd. Like I don't know what to make of it right now, other than like maybe people are like they don't want to miss out on the market ripping, but they're also a little bit concerned that a pullback could theoretically be coming some point soon, or they're still worried about a pullback possibly coming soon. But the action in like treasuries, like TLT, right? Like I mean I feel like this is just still setting up so well, and like it mirrors like what gold did so closely that I feel like it still has like a really clear path back to like the August high, right? Um, so that's why like for like the positions I've been trying to like stick with some of these names, even though I mean I know a lot of tech names are flying around, but like there is like really good action under the surface in like defensive oriented names. So like treasuries, right? And I mean I could just draw this. Kind of went over this last time, but um, so you'll see it's very very similar pattern to what gold did. So you can see right? Like a really beautiful pennant formed, triggered, broke out, and now it's paused right at like the this October pivot. But if it gets through this, then you're looking for a move up into August, right? And what's interesting about that is that it basically is like the exact same setup as what gold did when it broke out. So this is what I was like highlighting last time. So you can see what gold did, right? So it had a really fast move up to like the initial like September pivot, and then it blasted through and put in like a new 52-week high. So you can see the chart of gold, and now you can see what TLT is doing, and that's why I'm still like really interested in this chart because I still feel like there's like another like 4, 5 points possible out of this pattern because it's like so closely mirroring what GLD did back in December into January. So I still really like the way this is developing. You can see that they got the 20-day, which is now starting to provide some like good support. So like the TLT positions through March, and I feel like that's still like plenty of time, especially because it's basically like right at the money. But I'm keeping an eye on this, and I still think like this is one that like kind of like a sneaky bullish setup, strong tape. Like this actually still looks really good. Um, but like XLU, XLP, XLRE, like these are all like these are all like kind of like under the radar, like really bullish action, like REITs. I mean, like the REITs, like look at the breakout that took shape on the REITs. So, again, like there's plenty of good bullish action out there. It's not always necessarily in like the names you would expect. I mean, I know tech is like flying around, but like this is what I'm saying. Like I'm still like really focused on like bullish setups because it seems to be working the best. But it's just not, I'm not just like exclusive in like semis or like FANG names or like, biotech. I mean, like there's a lot of like good under the radar action out there. So it's like bullish setups, but like some of these are like, in like weird defensive, different like strategies. All right. So I talked about it in tonight's letter, but like the silver trade, I think better. This could be ready to go. Like the March like 17 call, it really has not been able to make much progress. But I mean it's right at the money right now, and I still think like this is kind of like the TLT to me. Like if this goes a little bit further, could really trigger a nice breakout, and I still think like that 1835 high from September is like a really clear target, and so that's why like I kind of want to stick with like the SLV call, just to see if it goes soon because if I have to roll it, then I'm gonna have to pay for more time and have to go something further out of the money. But I really like the way this is developing still, even though it hasn't been like a lot of momentum. There hasn't been a lot of momentum over the last like month and a half, but I still think there's like some potential there. It's definitely something that I'm focused on. Yeah, like I mean, so like that, like this is what really keeps me interested. So it's like yes, like the near term chart it looks good, right? But this is what really makes me interested is the long-term chart. This is when I think it really looks interesting. So you can see like it broke. So it basically broke like this long-term pennant, right? And it's held above it, right? So what's interesting is that it's held above like the long-term pennant. All the moving averages are starting to turn higher now. So you basically have stock which cleared like a huge area, a huge downtrend resistance range on massive volume here, right? Holding above it, building a higher base, and now you're starting to see the moving averages turn higher, which I feel like is like a great long-term swing indicator. So that's really why I'm trying to stick with silver, and that's why trying to be patient with it because I think that there's so much potential with this. Um, and it hasn't been an easy hold, but I think like if it can start building momentum through like 1725 and get up into like 18, that this could really make like a pretty quick run into like the 20s. So that's why I'm really trying to stick with this because like I love this from like a longer term perspective. Like this volume profile on the breakout was just excellent, and that's really from like you know from like a long term swing. Like I feel like that's such like a great sign is like this volume participation and where it held. So that's why I'm really trying to stick with it. Like the March time frame for the call, I'll see how it acts, but I still think that there's enough. Like that's like 5 weeks, so there's enough time for it to develop. And worst case, we can just roll it out maybe to April to buy more time for this one. So I'm not going to spend too much time on the VIX right here because I'm going to go over it. I'm going to go over it after like the. I'm going to go over it like a little bit later, just because. Let's just talk about how like volatility is like impacting some of like the earnings action. So I'll circle back to the VIX in like 15 minutes or so. But basically, like I just want to spend like a few minutes like going over the VIX and really it's just like I'm sure you've noticed it like the overall level of volatility for earnings like this quarter has been lower, and a lot of that has to do with just like the overall level of volatility in general, but also some of like the other action like kind of going on in the market too. So we'll circle back to this. What is this? My chart was a little sticky there, so I'll come back to this in like 15 or 20 minutes. But I want to go over hop into actually. Were there any questions before? Sorry, I kind of get going, and I can any questions. But like I said, I'll circle back to the VIX in a few minutes. I was gonna hop into like the lesson. Okay, cool. All right. So two numbers that I'm going to talk about today. So 2 to 1 and 100%. All right. Um, Kind of like they kind of go hand in hand with one another. But for me, like these are like two like really important numbers ratios um, on a day-to-day basis, and they really like are constantly um, coming up in my trading in like like the options to play letters and like the updates. Like I'm sure you've seen me like talk about 100% a lot, and um, really like of all of like kind of like the numbers and the math and like the different levels, like so for all of like the like the all these things that like make up options trading. I think maybe one area that matters more than if not one of the most important aspects, of options, if it's not the most, it's definitely one of the more important ones. It's risk to reward, right? And like consistency in this profession over like a long stretch, really, it takes it takes a lot of things to go well, right? And it's like proper trades, proper risk management, proper money management, proper mindset, right? And to me, like adding these all up is super important. But like some of these, like it'll take a little bit longer to like to work at. But then there's others that I think like if you start out with like a good plan, then you can kind of like build off of there, right? So um, risk to reward, I think is like a very important idea to kind of like wrap your head around as an options trader. And for me, like risk to reward, there's basically what I say is like a threshold. So it's basically like a minimum threshold that I try to stick with like on a day-to-day basis, and that's 2 to 1. And then like the 100% profit target is going to kind of fall in line with that. All right. So if that's a little confusing, like it'll make more sense as I go along here. So when I'm looking at a trade idea, I basically want the minimum risk to reward for that trade idea to be 2 to 1. Okay. So for every dollar that I pay for an option, I want to at least be able to potentially make two. Okay. So it doesn't always work out that way, right? Like sometimes like sometimes like you might sell it for only like a 50 cent gain. If you pay $1 for a call, maybe you only sell it for $1.50. Maybe you sell it for like $1.20, right? Maybe you sell it for a loss, right? But at the very basic nature of that trade, when I am looking at it and when I'm about to get involved, I want to at least potentially be able to make 2 to 1. And like that would be like the minimum goal going into it. Like again, it doesn't always end up that way, but like that's really how I approach like that trade, like at least 2 to 1. And this is going to be something that you will have to deal with more when it comes to like more complex strategies. So like when you have spreads or when you have flies, or calendar spreads, like all like as you go like deeper into like the option playbook, it's going to be really important to kind of keep like that risk to reward threshold, like those parameters in your head, because it's easy to kind of like lose track of what your risk is and what your potential reward is, right? So just like a simple, really basic idea to kind of like highlight that is like if you're looking at a call spread, right? Like you want like a $5 wide call spread. Say you want to buy like a like a $5 call spread on AMD, right? That was just one of the recent trades. Like to me, like I probably wouldn't entertain the idea of a call spread on AMD if like a $5 wide call spread on AMD if it cost me $3, because then like my risk reward isn't at minimum 2 to 1. Like I'm risking three and I can only potentially make five. So my risk to reward wouldn't be like 2 to 1. So you kind of see what I mean? Like if I have to if my risk to reward isn't that minimum 2 to 1 threshold, it's really not like an interesting idea to me. And like I feel like I'd have to like look elsewhere to try to like find like a better setup, or look at a different spread to find like a better setup, a better risk reward profile. Okay, if that spread costs 250, then that kind of meets that minimum threshold for me. Like I can risk 250 to potentially make five, so I could risk one to potentially make two. Right? If it's less than 250, that's even better, because then the risk reward profile goes up. All right. So this 2 to 1 threshold is going to be really important when you start doing more spreads, strangles, straddles. Like right when you go into these more in-depth, complex option strategies, I think it's really important to kind of remember like that minimum threshold that you really want to have. And for me, that's 2 to 1. So part of the reason why And again, like this is gonna like differ from one trader to the next, but it really kind of comes down to your overall success rate, right? So um, some traders, maybe they have like a higher hit rate, so a higher success rate, maybe like, like 60, 65, 70, 75% of their trades are successful, right? Other traders, maybe it's like only 50%, 45%, 40% of the trades are successful, but like those trades that are successful are just significant winners, right? So each trader has a little bit different style. Their success rate's going to be a little bit different, and the risk to reward thresholds are going to be different based off their success rate, right? And that's why, like, as we kind of just do like some simple math here, you'll see like figuring out what your success rate is, like what your average winner is, like, so like of say like your trades on a given day, like how many are on average are winning, how many on average are losing, what's like your average gain, what's your average loss, right? So kind of like going through this, like individually, like going through your trades, kind of get an idea of what your success rate is. It could be really useful because it can kind of help you figure out what your risk to reward threshold really needs to be. All right. So just like a kind of like a simple math calculation, like, so say like you average about 60% profitable trades, 40% losing trades, right? And I'm just like, this is just going to be like a really simple calculation just to kind of show you. But like, if you have like $1,000 and you make 10 trades at $100 each, right? So every trade is $100. You make 10 trades, um, and of like the 60% that win, assume that like 2 to 1 risk to reward, you double your money on those 6 trades, and of the 4 that lose, you lose everything. All right. So if you have your 4 trades that lose, that's $400 you lose, right? But 6 trades that are winners, that 2 to 1 risk to reward threshold, right? That's 600 gain, right? So at the end of the day, you place 10 trades, you're coming out ahead by $200. That's basically like a 20% return, right? And if you use the 2 to 1 as kind of like your minimum threshold, then you can see, like, if your success rate is higher, then, right, so if your success rate is 70%, then this is going to go up. Or if it's 75%, it's going to keep going up. Or if it goes to like 55%, you're only going to be up like $100 on the day. And then basically, if your success rate's only 50-50, right, 50% of the trades work, 50% don't, then your minimum risk reward threshold is only 2 to 1, then you're basically only going to be breaking even on like a day-to-day basis, right? So you kind of follow what I'm getting at here. It's a little bit more math than we normally do, um, but it's just like this is why I think it's important to kind of get an idea of like what your win rate is, how consistent you are from like a like, say, just like on a day to day basis, like what your average like success rate is, because then like that's really going to impact how you design trades, and what you want your minimum risk reward threshold to be. Okay. For me, so like 2 to 1 is the lowest I really want to go. Higher the better. I actually, when it comes to like catalyst trades, so like when it comes to earnings, I actually prefer almost like 3 to 1. There have been some, this quarter where I'm more in like the 2 to 1 risk reward profile of some of like the strangles that we've done recently. But generally speaking, you'll notice that when it comes to catalyst trades, I'm usually, I try to be closer to like the lowest would be like 3 to 1. Like, if so, for instance, like if it's like a strangle, and I think that it could potentially, if it's a strangle and I'm using spreads, and the risk is about like $2 to $2.50. That's what the strangle costs. Then minimum, like I want like the contracts, like the spreads to be about $7.50 wide. So I want to at least be able to potentially make $7.50 if I'm risking 2 to 2.5, right? Versus like risk 2, 2.5 to potentially only make 5. So like that's because like those are like higher risk setups. So I want to have like a higher reward profile too. All right. So you kind of following me? Like I'm, it's a kind of like a basic idea. Um, maybe not something you necessarily think about on a day-to-day basis, but it's an important option concept that really is like kind of like a fundamental like building block of like how you go about selecting trades, like designing trades, especially once you start getting into more complex strategies like spreads and flies and strangles and straddles and all those things. Now, some people, maybe you're like way more selective. You only like do like 2 trades a day or 3 trades a day, or even like only like 2 to 3 trades a week. So you're much more patient. Really only focus on like your top setup, and maybe your success rate is a lot higher. Maybe like on those trades you hit like 75 to 80%. Then in that case, maybe you're comfortable going with like a lower risk reward threshold. Maybe you're 1.5 to one, or 1 to 1 even. Like maybe like your risk two to make two because like you're so confident in that setup that you're willing to like lower the risk reward threshold, right? So it really it's going to be like something that you will kind of develop on your own. But it's just like an idea I want to like put in your head. Just something to like think about, especially as like you start to like design trades and get more active on a day to day basis. Yeah, yeah. So it's so like for me, for me like I'm not trying to like I would love for every trade to work, but I've known like over the course of my career like that's just like it doesn't work that way. Like I'm gonna have losers, and I'm gonna have winners. But I feel like what I'm really good at is I'm really good at maximizing my winners. So like when something works for me, like it tends to be like a 2, 3, 4 to 1 payday, right? So it's like some people will be different. Like some people like they're all about like singles, right? So like they're just looking to get like small winners. So small winners add up, and that's fine. I mean, like that's definitely a way to go about it. But like for me, like I've noticed just based off like the history, like what works for me is like my success rate more in like the 60, it'd be like the 60-65 range. And then when they work, like the reward is significantly higher. Yeah. I mean, 100% win rate would be fantastic, right? But again, it's like it's about finding like the right balance, right? So if your win rate is like 90%, then you'd probably be comfortable with like a lower risk to reward threshold, right? But if you're in like the 70s, 60s, yeah, exactly. So like that's why that's what I focus on. It's like when I win, right? When the trade is successful, I'm trying to like maximize the gain on that trade. So that's why I'm designing trades that have like a higher risk to reward parameters. Because when they hit, like they're enough to compensate for multiple losers, right? And tying it into to some terminology I use, but like so that's why like I'm really like you'll see me write about it a lot. But the 100% debit gain, right? So I'm sure you've seen me write about it a lot, and the reason why is because the 100% debit gain, that's basically that's the 2 to 1, that's the 2 to 1 floor, right? That's the 2 to 1 threshold. So when like because like so like you like the 100% debit gain that usually comes up in like swing trades. So it's like you sit in a swing trade for like a week and a half, maybe works in your favor, and like the contract like doubles, right? So it's up 100%. So like that to me is into like that 2 to 1 risk to reward threshold. So it just cleared the bar. So that's why like I'm so diligent with like taking money off once it hits that 100% debit gain, because that's when it clears like that lower bar for the risk to reward parameters for me, right? So like that's when I'm saying like cutting risk, rolling up, basically just trying to lock in money because like that's when it really clears like that low end bar for like a winning trade. So that's why you'll see me focus on like that 100% debit gain, 100% return so frequently because like that's really like the minimum bar I feel like for trades that I'm focused on. Sometimes sometimes it'll be less, but generally speaking, like it's the 100% debit gain is really like kind of like the minimum area when I want to start rolling. If time dictates otherwise, or if the market dictates otherwise, like I might do it before, but um, yeah. Well, so like, I mean the Mac. So I mean, like cutting losses quickly is a great. It's definitely it's definitely like a great way to approach your trades that aren't working right now. Like in terms of like maximizing the winners, like maybe um, maybe you can maybe be like a little bit more aggressive, like rolling, or um, maybe like you could try with like multiple contracts. So like do like scaling in, like scaling out, right? So if you have like say like if you have like four contracts, you can sell like one, or you could sell two at a time, right? So then you basically it's not trying to like time the exit perfectly, but it's kind of like you're taking money off as it starts to move in your favor. When you if you only have like one contract, then obviously it's going to be a lot more difficult. But you can still do like rolling up. Um, like that's like a good way to kind of like stick with like a trade idea, kind of like scaling back risk but rolling. Yeah. You know what I'll do? I'll put together like a video this week, just kind of going over like the rolling idea again. Um, but yeah, I mean it's you can try like maybe yeah. I'm gonna roll up. Yeah. So I'll roll up right after like the sell. Yeah. And it's mostly because like I kind of want to maintain exposure, right? So I don't want to have that scenario where like I sell out of position and then the thing keeps running and like I'm upset because like I missed out like on a huge move, right? So what I like to do is just like when I close a position and roll up, I kind of want to close position and then roll up like right away, just to kind of like maintain like that level of exposure. Well, if that's the case, then I might. So like, say like you had like, well, let's just use like we'll use like Tesla as an example, right? Like, because right now the implied volatility in the options is like through the roof. But so like say you had like well, let's go to the chart here. So let's talk about it. So say you had like an 800 strike call on Tesla today, right? And it jumped off the open and or maybe you had like 850 strike call, right? So we'll do something a little bit out of the money. So it came in today and it popped and it ran. So like basically like you're saying like I want to stick with the idea, but so maybe you only had one contract because these contracts are like super expensive. Um, so what you could do is like if you only had like if it was like a standard call, you could roll up to like a call spread, right? Because like that would be a good way to kind of like manage like the high implied volatilities like with a call spread. So or you could maybe look at like a calendar, right? So maybe you go to like a more complex strategy than just like a standard call. So maybe you look up, maybe you close out of the 850 and you roll up to like an 875 to 900 call spread, right? I mean, it's still not going to be cheap, but at the same time, like selling like that 900 call is going to like offset some of the premium, caps your upside above 900, but still, like it's a good way to like manage the higher implied volatility, but still sticking with like some sort of upside exposure. So that's why like if I just have like a regular call or regular put and I roll, like sometimes like I will roll to like a more complex option strategy like a spread or like a fly. And more often than not, the reason why I would do that is like if the options really like surge, right? So if the implied volatility surge, like I basically want to get the premium down, so I'd have to like go to something a little bit more complex, like a like a spread or a fly or something along those lines. Does that make sense? So it's not it like a high implied volatility works two ways, right? Because yes, like the at the money like the at the money call or the closer to the money call that you roll up to is going to be expensive, but at the same time that slightly further out of the money call is also going to be very expensive. So you know it kind of works both ways. So you can use like that high implied volatility to your advantage by like selling the like slightly further out of the money call to kind of offset the premium. Yeah, so like don't be like like yeah, exactly. So like if if you only have just like a standard call, like definitely think about maybe rolling up to like a call spread, especially if the implied volatility is like super high, or maybe like the contracts are like very expensive, right? Like if it's like an Amazon, like every like each like at the money call on Amazon is like 50 or $60, right? So think about like rolling up. Um, Um, the historical implied volatility for free. Uh, I mean, I know that Yahoo Finance has current implied volatility. I don't know if they have historical. I don't know. Let's see. I don't know if they have historical. Yeah, I think his historical is a little bit more in depth. So um, it might. Yeah. You know what? Let me try to find out. I'll see if I can find something that's free. What option platform do you use right now? Fidelity? Yeah. I mean, they should have it though, right? They don't have historical implied volatility. I check with the platform because it's a pretty basic option chain component. Um, yeah. It it's a they might have it. It's kind of like a standard thing. Yeah. If not, like I said, I'll do some digging and see if I can find somewhere where it's free. Yeah. So, you know, I guess like just to like kind of summarize, we'll come back in a second, but just to kind of summarize, it's like as as you kind of like get more active trading options, or maybe as if you're kind of looking for ways to improve trading options or trading in general, definitely start to think about risk to reward, that risk to reward threshold a little bit more closely. All right, and just like designing trades maybe that have a better risk to reward profile, or maybe trying to like maximize your winners a little bit better, right? Like trying to be a little bit stricter and trying to stick to like that 100% debit gain threshold, right? Because like at the end of the day, I feel like again everybody's going to be a little bit different. Everybody's going to have a little bit different style. Everybody's success rate's going to be a little bit different, but like over like a long term, like it's really important that your winners are orders of magnitude higher than your losers, because like that's really what's going to help you be profitable like over like a longer period. Is like your winners are significantly more from like a dollar perspective than your losers, right? Even if like maybe you're only like if you're only hitting like 55% of your trades are winners, but they're like each time you win, it's like three times what you lose. Then at the end of the day, you're still going to be profitable, right? So it's just starting to think about this a little bit more on a day-to-day basis, and like when you're putting on a trade, you're trying to be a little bit more, just a little bit more focused on what the risk reward profile is, and also like your exit, right? Like that 100% kind of like debit gain threshold. Like that's really why I focus on that 100% debit gain so closely, is because it's the basically the bottom end of that 2-to-1 risk reward threshold for me. All right. Any questions there? Okay, so I guess um, so just going back to the VIX kind of quickly. This earnings season's been more unusual. I spent so much time focusing on earning setups that like I can kind of feel when things are a little bit different. And this earnings season is definitely a little bit different. There's been some really great moves, but they've been more limited, and a little bit fewer and farther between. Like Amazon was fantastic, right? Um, but like on a day-to-day basis, you're not seeing like the greater than 10% swings that we kind of got accustomed to like the last couple quarters. And like one of the reasons why is like the overall level of volatility is lower. So like the VIX kind of in like the low teens. All right. So like that's definitely going to impact earnings to a certain extent. Like when the overall volatility is a little bit lower, then the average trading range is typically a little bit lower. And you might not see like the huge swings on the options, right? But that's only one of the reasons. And really, to me, maybe one of like the more important reasons why you're seeing like a little bit more muted action around earnings is because of like the really aggressive uptrend. Okay, like in the market and a lot of stocks, right? Like Apple, right? Just just super aggressive uptrends, and like one of like the defining characteristics of like really tight trends is that the overall level of volatility is lower. Okay, and so many stocks are in such like aggressive trends that it's really kind of impacting like the overall environment around earnings, because a lot of big names are just in like these aggressive trends with like very one-sided expectations, that you're not seeing like the huge moves because basically everybody's already expecting like a good number, right? Or the options maybe are so expensive that they're not really, there's not a lot of room to get rewarded on, right? So that's why you'll notice like I've been kind of like veering away from some setups, even like maybe names that I like the last couple quarters we've traded, um, and maybe like focusing more on like the immediate aftermath, right? Like looking for like quick swing trades like AMD, right? Looking for like a quick swing trade right after earnings, right? Because then like the implied volatility will drop, and you're looking for like a resumption of the trend, right? So that's why like AMD, we didn't do an earnings trade this quarter. Last quarter I thought it was interesting. This quarter we didn't. Basically watched for like a pullback. You saw the implied volatility collapse, right? And then you're looking for a move back into the trend. So when it got back above the 20-day, I was looking for a trend resumption, right? So like that actually worked like really great. The things that I'm finding that are working better from an earnings perspective are like the setups like Amazon. So like stocks that haven't been participating. So things that maybe have been consolidating, things that haven't really acted great in the last few months or maybe the last year as the market's really been like super strong. Like these are the setups. Yeah, well, it was like a risky trade, right? I mean, like the last couple quarters really weren't that good for Amazon. Um, but these are like the setups that I find have more potential, and these are the ones that seem to be working a little bit more consistently, but a higher risk, right? So like Amazon, I feel like it could have gone either way. But like the better risk reward setup was on the upside because if they had actually delivered and the stock popped, then you figured that there could have been like a catch up trade, right? Like when it got up to like 2000, you figure there could have been a catch up trade to it, and it ended up working out perfectly. But again, when you're playing earnings like from like a one direction point of view, that inherently to me like increases like the risk parameters. Okay, so like if you're only trading Amazon to the bull side into an earnings report, then to me like the risk is higher for that setup. So that's why I'm I'm trying to be like really selective with like the earnings trades. Still doing some strangles, but it's really just trying to be like super 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 selective because like the overall level of volatility around earnings is a lot lower this quarter. That definitely could change. I mean, we still have some like interesting earnings coming up, but like that's why like you'll notice like um, I'm really trying to be very specific. I'm not doing as many earnings setups like on a day to day basis, and like some of like the names like I'm stepping into like right after. Yeah, yeah, Yeti, right? So like Yeti was one. So this one was like frustrating. So this was like a lower debit. This was like a lower debit like one sided strategy that I was looking at into earnings, right? Thought it was like a pretty good one. So I was focused really only on the bull side because holiday quarter, it was kind of hanging out underneath like monthly resistance and it was like really heavily shorted. So I was really only focused on the long side. But obviously it didn't work out, and like that's why like it increases like the risk when you're only playing these to like one side or one direction into earnings. And like I feel like that's kind of how like this quarter has like started to like force our hand is because the overall level of volatility is lower. So you kind of have to take like a little bit extra risk, which I don't particularly like. And that's why I'm trying to be like really, really selective with like the setups. Well, I mean, as it stands, actually, like the strangle wouldn't have worked either. It didn't move enough either way for either side to be rewarded. It was pricing in, yeah, it was pricing in. I think like four, and they only ended up moving about like a dollar and a half to two. Yeah. But that's why I don't like when the market dictates like the setups for like these earnings trades, and like I feel like they're kind of like forcing us in. Oh yeah, so like Twitter, yeah, Twitter was a crazy one. I'm still shocked at that how much Twitter was up. Yeah, yeah, yeah. Twitter, Twitter. Yeah, that was frustrating. Yeah, Twitter probably should have traded both ways. It just seemed like after Facebook and after Snap, it seemed like it was set up for a move lower, especially because last quarter was negative. Um, but yeah, I guess like if I had to go back and do it again, I'd either like hold off or maybe do like a strangle. I mean, obviously, if I could do it over again, I'd do a strangle. Yeah, it's frustrating. I feel bad. I mean, I thought that was like a good bear setup. Obviously, it went the opposite way. But you know, you gotta take your shots, right? I mean, I feel like you kind of have to. If it's a good setup, gotta take some risk. Obviously, that one didn't work though, which is frustrating. Um, but like I just I kind of want to just like highlight this just to like if you're wondering why I'm not writing up more earnings trade ideas. It's just because like I'm really trying to be super super selective, and I I feel like there's a lot of great potential just waiting like 2 days after. Cause like some of these stocks that are in these really aggressive trends, just waiting like 2 to 3 days after for like kind of like a quick setup, because it seems like there's been some like good follow through like really really in the really immediate aftermath of some of these earnings, especially like these names are in these like aggressive trends. So that's kind of like what my focus has been this quarter. And if I start to see the volatility expand around these earnings, then I'll focus more on like the earnings setups, like or focus more on patterns into earnings. But just gotta like do you got to do what's working. You got to focus on what's working. And right now, what's working is kind of like either the names that aren't participating or waiting for like the aftermath of earnings and looking for like a quick swing trade. So that's really been like my focus. All right. Um, okay. So I mean that was a lot of what I wanted to cover. I mean, do you guys want me to break down a couple setups? You have some names for this week. Um, if you want me to like break down a couple setups or like go over like some other, if you have any other questions, like this would be like a good time. So like actually next week is going to be pretty busy from like an earnings perspective. Next week you have um, next week's actually going to be really busy. So next week you have Baidu, Beyond Meat, Autodesk, Salesforce, Trade Desk, Workday, Shake Shack, Home Depot, Lowe's, Wayfair, Macy's, um, Smile Direct, Space next week, Weight Watchers next week, Etsy, Square next week, CrowdStrike. Okay, yeah, I still have this thing up here. So this hasn't worked as fast as I wanted, but it's still a good setup. So it's not moving as fast as I want, but there's definitely reason to stay with it. I mean, you can see that it's starting to clear like a pretty big area of resistance here, like around like 62, 63, right? And you see like the 8 EMA, still like really great level of support, and it's like a real steady uptrend that's starting to form. So overall, it's not flying higher, but it's positive and there's progress. I think really like time frame is going to be kind of important on this one because um, like you've had some like really big breakouts on some software stocks. This one hasn't had the big breakout just yet, but it's positive overall. I mean, it's kind of stair stepping higher. You got like steady demand from the 8 EMA here, and like the 20-day also is kind of moving higher. So I think like you're still looking at a move up into like the 70 area to retest this October high. Like it still seems like it has a pretty clear path, but you just want to make sure like there's like enough time for it, right? So you don't want to like try to cut it short and try to be like too perfect with like the time frame. I think a little bit more time would be better. So that's why like the March time frame or maybe like 2 3 weeks versus like trying to like time like the weeklies on it. Yeah. Yeah. So like the stock looks fine to me. I mean, like yeah, like the options are a little bit more challenging, but the stock definitely acting. It's still acting positive to me. Like I still like the look of it. Yeah, yeah. I still really like the look of it. And then Beyond Meat. So like yeah, next week is gonna be kind of crazy, but like I think this Beyond Meat is still pretty interesting too. I like the look of it. I mean, right now, just holding like March call spreads. Um, that's, I mean, ideally, I feel like if this can get up into like the high 120s ahead of earnings, it would be like the perfect scenario because then we could like roll off some risk, um, maybe like scale back a bit, and then like hold like a flyer into like the report. Um, Yeah, right now, like I'm holding like the March 130 140s. So like that's the options in play trade. That's what I'm sitting in. And it's got a really good look to it. Like I like the way it's developing. It held where it needed to, and I feel like there's some like similarities between what it did, what it's doing now and what it did back here, right? So the eight. So like I I really like the 8 and the 8 EMA and the 20 simple. Like they're like kind of like my they're like two of the averages I use the most when it comes to swing trades. So you can see like when Beyond Meat had this crazy move, right? The 8 EMA came into play, and then the 20, and then when the 20 caught up, you can see how it kind of set up the next leg higher. So like I'm not expecting Beyond Meat to like trade up into like the 200s again, but I'm just like I can see some similarities, right? So you had the 8 EMA catch up, and now you see how like the 20 is really starting to provide like a really nice floor and it's starting to put upward pressure on it. Yeah, that's okay. I mean, like there's plenty of trade ideas, right? So don't feel like you have to like chase something if it's like started to move or if it's too expensive. Um, just definitely you want to be comfortable with like the trade idea, right? So if you're not comfortable when you start off, like it's not like a good way to begin a trade, right? So if it's moved a little bit too much or if it's a little bit too expensive, then it's fine. Just you can either wait, maybe there'll be a better entrance, or it could be just like a different setup or a different stock to like focus on. Yeah, yeah. So yeah, okay. Well, it's probably a good idea to wrap things up about here. I mean, we're about an hour in. When we went over a lot of things, so it's probably a good idea to break for tonight. Does that work? It's about a. I just got to duck out. If you have any, if you have any other questions, like I'm happy to like go over. But if not, we can stop here. And if something comes to mind like during the week or before we meet next, and you wanted me to go over it, like just shoot me an email, shoot me a message. Like either I can respond to the email or I could even possibly like put together like a video. It's like one of the daily videos kind of covering it. So if there's something that comes to mind and you have like a question on it, or maybe you want me to go over it a little bit more, just like shoot me a message, shoot me an email, and like I'm happy to like do that. Like that's really um, to me like it's like super helpful to get an idea of like what you guys want to hear, and I can kind of tailor those videos towards it. All right, that's great. No, I mean that's what I want the videos to be is like helpful. So if you'd like me to cover something, just let me know, and like I'm happy to like spend some time like putting a video together for it. All right. Okay. All right. Well, I guess we'll wrap it up there. Hopefully, get some good action this week, some good trading this week, and yeah. I mean, I expect it to be busy for a while. I mean, like next week's. I'm just looking at the earnings like that are coming up next week, and there's like a lot of big names. So there's gonna be a lot of stuff going on. So should be plenty to do, right? So hopefully we get some good trading action, some good trades, make some money, um, and round out February on a positive note, right? Yeah, awesome. Well, thanks. Yeah, I appreciate I appreciate you stopping by and participating. Like, yeah, no, like thank you. Like I mean, it's interactive, and I just appreciate you spending the time and like asking the questions and like going through everything. So yeah, it's great. All right. So have a fantastic night. Have a great week, and I will talk to you guys all soon. All right. Take care. Have a good one.